After the push 2 weeks ago, the market was nearly staying at one level, working back and forth to the side and not giving us a new indication. But you can see I'm wearing a red shirt. Is this an indication? Let's have a closer look at the probabilities, because there we can maybe find out what the market is giving us next. So stay tuned and let's check what the market is giving us and how we as a trader should react. Let's start with the Dow Jones. Of course, we will talk about the S&P 500 and Nasdaq as well. The latter is working in a completely different way, but definitely something we want to have a closer look at. Let's start with the Dow Jones. All contracts I'm showing, or everything I'm showing, is the future contract, the CME traded December contract. If you like to trade something different, depending on your country or your broker or your bank, whatever your platform is, you may switch between the different contracts, but you can of course compare the highs and the lows to find out where I want to trade, what I see in the market. So if you prefer some different contracts like CFDs, for example, or whatever, then you can find it out by just finding the same points in your charts. So if you see the market from the low end of October in the 4-hourly chart, I can bring it up a little bit bigger so that we can see that the market is in something some people might think or may think it's in a sideways range. It might be a sideways market. No, it's not like that. It's of course a bear market. Some people don't believe that, but you can always find out the last high was this, or this is the same high, and currently the market is here, so you can easily see this is a bear situation or bear market situation. But yes, you're right, it is more or less killing time, not going into the opposite direction of the strong market. The strong market was to the upside, so this is giving us the direction of the trend, the direction of all the people willing to do something, and this is just meandering and killing some time, which is a typical corrective pattern. But to find out what a corrective pattern really means, it's important to understand how the markets are moving. And we have this typical situation. We have a strong movement. This is something like a trend. And very often we find some short counter trend movements inside the whole pattern. So we can see, okay, while moving to the upside, the market is sometimes coming down in a small or sometimes in a bigger step. So just let's estimate that we are currently, or we had started here, end of October. So we had a strong move to the upside and now walking more or less to the side, but it's a little bit a down market, something like this. And if we have something like this currently, we can think about how far does this need to go down. And I'm always looking on my charts here. This is indicating the probability for a low, and you can see the highest probability is inside this red area here. And if you just want to find a really typical point, is roughly 40%, or let's say the Fibonacci level 38.2%, something around this level gives us a good impression that here might be a very important point for a low, but it's not exactly this level. That's really, really crucial. Some people are drawing Fibonacci lines and are very, very disappointed that the market is not turning exactly at that level. Yes, of course, it's not a given point that the market needs to turn here. It is, of course, just an estimation. But you can also see that if the setback is only 30% or only 20%, the probability is less. Don't get influenced in the wrong way. It's not about the height here of the curve. It is about the area below the curve. So you can see this here is 20% roughly. This is 60%. Not roughly, it's exactly 20%. In the end, it's also 20%. And this in the middle is 60% probability. So you can estimate if the market is turning around here, that you have 20% in favor that we found the low and 80% that we did not find the low already. But if we see what the market gave us so far, we can see, let's draw the Fibonacci lines. 38% is here. Let's add some other levels here so that we can estimate where we are currently. So the lowest point was roughly in the middle of both. So it's roughly 30%. So we have a quite good chance it's over already. but we have a higher chance that we did not see the low already, so that it is still to come. So it is really reasonable to think about the situation that the market needs to come back and maybe undershoot, going below this level here, which is the 10th of November or the 12th of November lows, so that the market is going not necessarily exactly to this level here, but roughly around 28,500, 600, maybe even 700, but roughly this level. I would be more satisfied if I see this one, because this is a typical point where corrective pattern ends normally. So if this is the case, if the market is reaching somewhere around here, then I see very high probability that this strong movement to the upside and this corrective pattern is over, and we will see a continuation, the same like we had here in the overall. After the strong move, the setback like seen here, we can expect that the market will continue to the upside. And the good news, that this is fitting perfectly in the overall picture that we have here from the Corona low early in this year. And we had some corrective pattern here as well. And now the market is bringing us roughly the same situation. So it is not only this one here, this is the same like this one here on a daily base, that we can expect something like this, but we can also expect that we have a continuation of this up move here as well. So I'm quite bullish here with the market, but not now. I think it's a better chance that the market needs to go here a little bit lower. So what about just buying at this level? Isn't it a good idea just wait for, let's say, 28,500 and then buy the market at that level? Yes, it's possible. But unfortunately, just by reading the numbers here, you can easily see that it's not given that there's a very high probability that exactly at this level the market is turning. And we all know the outcome. We all did this in the past. Of course, we tried to buy these low levels here. And then we're really disappointed when the market needed a little more before turning, or completely forgot to turn and just got the wrong direction and went down completely. So please don't get me wrong. If I say the market should be here, it is a highest probability for a really nice corrective pattern. It does not necessarily mean that the market will go there and turn definitely. So what shall we do in this case? When the market is reaching this level, there are two possibilities. If you want to enter the market at these levels, I strongly recommend use some additional tools, for example, like the candlestick pattern, just an example, to find turning points. For example, a hammer situation, which is a small body, a long tail on the lower side. It could be roughly looking like this, a small body and a tail on the lower end. And when the market is going over this last high of the hammer, then we could try to buy the market. This is some typical corrective, or no, not corrective, but turning pattern, which is giving us an indication that the market is likes to turn a little bit. There are others as well, like a bullish engulfing, for example, Harami situations, or morning stars, whatever it is. If you are interested in this, maybe it's the time in the next video I can describe this when we reach this area here. But if you see something like this, you can guess, okay, we have a good chance, and I can try to enter the market at that point. But still keep in mind, the probabilities are quite high that the market will stop you out, and at a later point you will have to try again. But the good benefit of this idea is that you have a really good risk-reward ratio. This is something I cannot stress enough how much important this is. It's really, really important to have a good risk-reward ratio, and keep this in mind. It's okay if you have an average risk-reward ratio, but if you have that, you definitely need something like a really high probability of success, because if you want to have a good trading result, you need a good combination from risk-reward ratio compared to your probability rate or your hit rate with your next trade. Just an example, if you have a 50-50% chance of a hit or a loss, then you need more than 1-on-1 risk-reward ratio. And if you want to make big money, of course, you should have double as much profits than losses, for example. But you can trade this off. You can say, okay, I want to have a little bit better relation with the risk reward, or I want to have a higher probability. The biggest problem for most traders is that you cannot calculate probabilities here so easily. This is just giving us an indication. This is not a 100% absolute quote here on how big the probability is. It's just giving us an indication. Is it high probable or is it low probable? You can see this from these levels here. But I always recommend to have something like a risk-reward ratio, like 2 times of profits compared to 1 time of loss, for example, or even higher. I normally not trade below 1.5 to 1 risk-reward ratio. There are some situations, but normally I only trade if I have something like 1.5 to 1 or even better. And I prefer better, of course, but don't get me wrong. If you want to have something like a 10 to 1 risk-reward ratio, you should expect a really low probability of success, because both numbers are influencing by each other. So keep this in mind when you're calculating something like this. So I will talk about this later, maybe with another example. But if you want to enter the market here, this is a chance to find a good point to enter here on the lowest end of the market. But this is not what I'm doing normally. What I'm doing very often is I'm switching to the lower time frames, for example, the 50-minute charts, to check out whether I can see something like this followed by this. And you can see this is not really rare. You can see if you see something like this followed by this, you can at least estimate that something like this will happen again. It can be way more. And if this is happening near these levels here, we have a good chance that something bigger will start here, and we will see a bull market for a longer time. But even if not, if you see something like this and the market is at least doing something like this again, you have a good chance that you can trail your stop to break even or something like this, or you can take partly profits from what you have already, and you can trade at least this here. And you can see there's no limit on the time scale. You can switch from 15-minute charts. You can see this is here the same situation. Compare the strong move to the upside compared with the weak move of the downside, and you can expect that something like here will definitely happen again, and maybe it's going even further, but that's not a proof. But you can easily at least see, this is giving me a turning situation. So I strongly recommend not set a buy limit order at these levels here, but maybe something like an alarm or something, so that if the market is reaching these levels, you can fine-tune this situation here on a lower time frames, 15-minute charts, hourly chart, 5-minute charts, or whatever you prefer, and see whether you see something like this followed by a corrective pattern here, which may look like this, or like an A, B, C. Both is okay, both is valid. You can clearly understand which side is the strong one and which one is the weak one, and then you just need a trigger to enter the market on the bull side. So that's in this case the bull side. Of course, the situation is also working on the lower end, on the downside, but in this case, of course, we would expect something like a low here, and then the market is turning. So don't just buy at this point. Never catch a falling knife. Wait for some kind of confirmation to enter the market. So what happens if the market is not going there? We saw that it's not a 100% probability that the market needs to go there. The chances are very high that we somewhere, it's not exactly these levels, but somewhere around these levels, we should expect in the next hours. But what is happening if the market is not going so far? Yeah, well, this is not giving us an entry point at that level here, of course, but you can, of course, think of, we can do the same stuff at any time. So if the market is doing this instead, of course, I'm wrong with my idea. But as a trader, this is nothing to worry about. I just need to wait for something like, yes, you got me right, like this. But if you see something like this, the outcome that the market will continue like this is less probable. It's possible, of course. You can still stick with the market, but you should think about taking partly profits here, just half of it maybe, or just trail the stop to the entry and say, okay, let's try it. But if the market instead of that is continuing down to that level later, yeah, okay, you will lose your profits here. Yeah, but that's all. You will not lose all your money. It's only like trailing the stop to the entry, to the break even, and nothing really worse happened. So I think this is really important to understand. Expect something like this. If you get something different, you know what you're looking for, or what you should look for. Some strong move and some weak move. It's always the same. You can see it in the big picture, in the very big picture. You can also see it in the very, very big picture. Here on a weekly base, taking months or even years for the outcome. And we've seen this in the very low time frame here on a 15-minute chart or 5-minute or 1-minute chart. You can also see the same situation over and over again. So there's no reason to say, no, I cannot find it. If you find it, wonderful. If you don't find it, yeah, okay, check or wait for the next opportunity. There will be another one. You can trust me in this case. So let's switch to the S&P 500, which is the ES, the future, the E-mini future on that. And of course also the December contract. The situation is roughly the same, so I don't want to talk too much about this. So we had a strong move here to the upside, and we had something like a setback to the 38.2 level here already, but this was too fast. So also in this case, I would expect not a single move to the downside as a corrective pattern. I normally expect something like a 3-wave or multiple waves here. So something like this is still something I would expect, maybe even a little bit lower than 38.2 level. So I would prefer some picture around 3,500 or even 3,450, something around these levels would be beautiful for a corrective pattern. And then we have still the same situation, strong move to the upside, ABC to the downside, and the best opportunity to re-enter into the bull market. And of course, you can wait for a big confirmation to enter the market on the long side, but you can also say, no, I don't want to wait so long. I will check the situation here on a lower time frame. If I see something like this on the lower time frame, for example, here on a 4-hourly chart or in the 50-minute chart or whatever, situation is roughly the same. The best chances are that we will see something around this. But don't get me wrong, it is not a 100% chance that we will go there, and it's not a 100% chance that the market is turning there. But it's the best picture, the best we can expect. So it's nice to have a close look around here to find a low, like I told you. But if you see something completely different, the market is surprisingly rising tomorrow or really falling like a stone or whatever, you can, of course, do exactly the same what we always do. Try it at any other place as well, but this is a preferred picture. So that's the reason why I show it to you. So at the very end of this video, I want to show you the Nasdaq, because the Nasdaq is a little bit different. It was a little bit different what we've seen here in the big picture. You can easily see that the corrective pattern here is looking a little bit awkward. So to be honest, if I can wish for something, I would like to see something like this. And after this, the market is rising. So don't get me wrong. I don't wish anybody to make losses or to see that the market is going down and suffering. No, that's not the point. But for a typical corrective pattern, something like this would be way more typical than directly going to the upside. So in this case, I see the best chance that the market is going down. How does it fit to the Dow Jones, for example? No, it does not fit. To be honest, it does not fit. But if you remember right, the Nasdaq and the Dow Jones did not move the same way in the last few months. It is similar in the big picture, but not nearly the same. If you can see what the market is doing here and compare this with what we've seen here with the Dow Jones, you can see, no, it's completely different here. So I can understand that maybe the Dow Jones is doing something like this, even something like this is possible, spending some time, taking some time, not moving forward, while the Nasdaq is coming down a little more severely and then is giving us new strength. This is just an idea. It's not given that this is happening. And I would not trust the current situation so much because the Nasdaq, for example, here in a 4-hourly chart, you can see the strong move. This is awesome. It's a nice one. I would love to see some ABC pattern. Yeah, this would make me happy and give me a good impression that the market will go up again. But this one is a strong one. So this one needs to be a corrective one. At the first glance, it looks like a corrective pattern, but to be honest, if I see this in a lower time frame, for example, in the 15-minute, to be honest, it looks also a little bit like one up, shaky pause here, pause, and then going up. So I can imagine, if you roughly see this, what I've drawn here, this is a 5-wave move, what we had here. The end is maybe an ending diagonal or something like this, but it is roughly like this. And this looks quite impulsive. And we know impulsive is the trending situation. So I would at least allow, it's not my preferred picture maybe, but to be honest, I definitely cannot deny this. This looks very impressive to the bull side, as a bull market run to the upside. But it should be corrective. So this is not fitting together. If in the overall picture, it looks quite corrective compared to the strong move to the downside. But if you have a closer look, it looks quite strong. And if you see this move to the downside, which might be the continuation of this one, which should look really strong, you can see, yeah, but this is not strong. This is really, really shaking. This looks really, really corrective. If you see this one outside of the chart, you can see, no, this is not a impulsive pattern. This looks like a corrective pattern. Corrective to the downside, strong to the upside, gives us a chance that the market finally is waiting for the bull market. So I'm not absolutely sure about how to read this pattern because we have, to be honest, on a lower time frame, an indication that we will see another bull market run. It does not necessarily need to go so far, but I don't see that the market is really strong falling in this part here and in this part. So I think we have a chance that the market is coming down a little bit, which is completely fitting to what we've seen with the S&P and the Dow Jones. This might be the chance for the next few days. And after that, it is possible that the market first will continue. I'm really sorry. Will continue something what we've seen here. Maybe it's not as strong. Maybe it's glowing a little bit more like this, like an ending pattern. And then we will see a continuation to the upside. But there's a lot of maybe, perhaps, nobody knows. So this is something, as a trader, I don't like the current situation very much. Not the overall one. So what I'm doing in this situation is I'm waiting for a clearer picture. If I see that the market is strong into one direction again, for example like this, and coming down in this direction, maybe I don't have a clue what the market is doing here, but I have a clue what the market is doing here, so I can trade the lower end picture here. So this is my invitation for you, not to stick with the picture you don't understand completely. Maybe you understand, but I don't, but I see too many question marks here in these movements. So I would not synchronize all these pictures here from the daily chart, the 4-hourly charts, and the 50-minute charts. They are not fitting together completely. So I don't have these extra valued information, which I normally like to see in the markets, fitting pictures in different time frames. I don't see it here, so I don't rely on them. What I'm doing here now is I'm waiting for something like this, or if the market on the other side is showing me something like this, giving me something like this, I would trade the market short because the strong market is to the short side and the weak market is to the upside. But that's really important. Wait for something, some kind of confirmation like that. If you see that, then it's awesome to trade that even on a lower time frame. And you can, if you believe you know where the market is going, or if you see something maybe in the next hours or days, then you can stick with the position and just trail the stop. This is something I definitely recommend. Whatever you're doing, never ever forget a stop. Never trust any probability. whatever it is always possible that there's something completely different coming up. So because of that, it's really important, first of all, to set a stop, an initial stop. And if you like to do something like a trailing stop is something like you can, as long as the market is moving into one direction, for example, like this, you can just say, okay, I have these dots here. This is a super trend, for example. As long as the market is moving, everything is okay. But when the market is turning, then I want to close my position. So you can trail your stop depending on the behavior of what the market is giving. A super trend, for example, parabolics, they are giving us a good indication for these stop levels. I will do another video on that in the next time, so that you can think about the use, how useful trailing stops are. And the second is not only set a stop, calculate your risk, better small than big. So don't give all your money and all the risk in one trade. Expect that you are wrong. If you do it 10 times, then you can expect that the overall result will be positive, but not the next single trade. Whatever it is, the next single trade, the probability is below 100. So it's not a 100% chance that you will be a winner with the next trade. So that's the reason why you should never overdo your risk with the next trade. That's really, really important. Okay, that's it so far. I hope this gives you a good idea for the next few days, what we can expect and what we cannot expect. Both is really important. Some people are really saying, but I want to have a clear picture. Yeah, me too. But I prefer an absolute unclear picture, which is giving me the promise, don't trade me or just trade a lower time frame, because I don't promise anything. This is something I prefer over a wrongly valued picture, which I should not trade. So keep this in mind as well. So have a good week, have a good time, and stay healthy. If you like this video, please push the subscribe button and the bell. And of course, I would like to see a thumbs up, and any comment is valued. So please let me know what you wish for, or what it helps, or what is not helping, so that I can improve whatever I'm giving to you here. Okay, have a good time. Bye bye.